And we're officially live only on onedealaway.com/live. Welcome to another episode of Money Matters. My name is Nev, and boy, do we have an excellent episode today. It is Saturday, July 25th. Can you believe that it's actually end of the month? I mean, I feel like I just did the whole it's end of June. Now I'm saying it's end of July. And we have an excellent episode for you today. We're actually going to be talking about the Holy Trinity of money. And that is, in my humble opinion, gold, silver, and crypto. So we're going to be covering those topics today, and you can expect a whole lot more crypto conversation this weekend. So that's basically what we're covering today. We're going to be looking at what's going on with gold, what's going on with silver, what the performance has been, what can you expect in the future, and we're going to start talking about some big picture things that are happening and developing in the world of crypto that is going to help you potentially think through how do you position yourself and your money in this space to be able to benefit from all the changes and disruptions that are coming our way. You know, you could choose one of two things. You cannot participate and basically get wiped out like the dinosaurs, or you can come in on early and appreciate and let the crowd lift you on. And I will explain exactly what I mean in all of this stuff when the show starts. So I hope you're excited. I know I am. Let's do this. And good morning, good morning, good morning. Happy Saturday to you. Boy, am I excited that we get to do all kinds of cool things. And I'm very excited that it's a weekend because I get to do all kinds of stuff. On weekends, no clients, no calls. I really get to do what I want to do 100%. Not that during the week I don't, but every so often there's certain things that kind of pop up that you're like, I'd rather not, but I have to. So, and that's okay. That's okay. So I hope you're doing well and thriving over this weekend. And it's my goal to deliver to you some really cool and important things. A couple of things before we get started with some of the news and kind of updates and having conversations about it is to keep in mind that there are a couple of things happening today. Today is a very key day for millions of Americans because the unemployment payment ends today, and we still don't have a final word, a final sort of bill passed whatsoever. So my heart goes out to everybody who's in that situation, likely stressed out to the gills. Hopefully you're watching this channel. Hopefully you're paying attention. Hopefully you listened to me about a month ago, a little bit longer maybe, when I said use the time right now to save up because it's not going to come on time and you want to protect yourself. Hopefully you have used a little bit of money of that extra to either pay down the bills or potentially invest, or a little bit of both. And now you are actually able to benefit from it, because had you listened at that moment in time, you would actually have been made quite a bit of money actually, and you would have been potentially doing at least okay. Not perfect, right? The world has not solved itself, but the immediate need and immediate stress for the next couple of weeks would have likely been resolved for you. So hopefully you have listened, you have done that. And if you have, let me know in the comments or in the chat. Speaking of the comments in the chat, I want to welcome everybody watching this live on onedealaway.com. And if you're unable to watch live for whatever reason, I understand it's not 7 a.m. everywhere. And for those of you that it is 7 a.m., you might be asleep. I don't know. But, if you're watching this on YouTube, welcome as well. Do me a favor, smash that like button. Do subscribe and hit the bell button so that way you get notified when the new show shows up, which is every single day. You guessed it, because I say this every single day. So do let me know, and do join in, because we do talk about some very, very important topics and concepts that have a potential and power to transform your financial life and really help you benefit. That is my entire goal. That is the entire purpose of Money Matters, is to talk about things that matter, like money, and discuss what does that mean for you, and how you can benefit from all the changes that are happening around the world when it comes to money. Now, yesterday, actually for the past 2 days, so Thursday typically is real estate updates day. And then, we started going into different conversations, and weekends are typically crypto. But there was so much news, so much good stuff when it came to real estate that we actually ended up doing 2 full days of real estate education, conversation, investing strategies, all kinds of stuff. And so there was another article that just popped up, and I can't help myself. I got to share this with you because I think it's very, very important. Another reason to sort of like think through what's going on. And then I promise we're jumping into precious metals and crypto. So here we go. Mortgage rates just hit another record low. This is actually yesterday that has transpired, and we're looking that the 30-year fixed rate is now back down to 2.87. Remember how we talked about the average had gone up 0.1%, right? 1 basis point. I think we talked about it on Thursday, likely. And, but when I do a show on Thursday, obviously I'm dealing with information from Wednesday and before, right? And then you have all of Thursday, all of Friday. So here we are in Saturday, and things have shifted already. We are back down to 2.87. So we were at 2.98, jumped up a little bit, jumped right back down to 2.87. And it gets even better. Hold on, wait for it, about a full percentage point lower than a year ago. So remember, last year it was about 3.84%. Now we're below 3%. And that's just the average. That means that there's some that are going to pay more, some that are going to pay less, and it all depends. But there's some that are paying even lower. Now, here's the interesting piece. There are pools of loans being sold right now with the average rates of 2.625, right? So that's what the investor is going to earn, okay? That's what the person being basically on the lending side of things is going to earn, is 2.625. Now, what does that mean for borrower at the front end? Well, these people are getting rates as low as 2.35 to 2.5%. Folks, I've been calling it. I've been calling it since March that we're going to hit not just single digits, because we've been in single digits for forever. And if you know anything about mortgages or history of real estate investing and mortgages and stuff, you will know that about 30 years ago or so, in the 80s, the average mortgage was about 18, 19%, right? So we've gone from 18, 19% in the 80s down to 2.5%. And I do expect that it will go lower. I know it's crazy. I don't know that it's going to go like, negative, although, it has happened. There are countries that are offering negative interest rates and mortgage, meaning you actually, get paid to borrow. And so you buy an asset at a negative interest rates, meaning if you borrow 100,000, you pay less than 100,000, and you still have $100,000 property. Now, the value of the property could go up and down, but if you're focusing on the cash flow and that kind of stuff, then it could be an amazing deal. So, but you got to be smart. You got to think differently about all of these different things. So anyways, so we're looking at 2.375, 2.5% mortgage. Mortgage rates closely follow the yield on the 10-year treasury, and that on Thursday fell to the lowest level since March. So that has been falling, right? And we're going to talk a little bit more about the fiat currency called dollar. But don't worry, the rest of the fiat currencies are following. So it's not a shock or surprise. Everybody playing the same game. We're all dancing to the same tango music, okay? We only recently saw the introduction of an all-new mortgage bond coupon in April. It technically allows you for rates to go down to 2.25 on the 30-year fix. So remember, right now, I just said 2.3 to 2.5, right? That's the range. But now there's been a new one that has been released, and it allows for mortgages to go down as low as 2.25. And and right. So there's this like back and forth kind of motion, and we'll see kind of how things progress if more people are buying and refinancing what's going on, and if we are hitting some of the troubles, which it seems like we are, because virus is back with a vengeance, and we're seeing all of these states reporting higher numbers and reclosing and right, of everything stuff, remarching, let's call it that way, because I don't know how else to call it. Uh, so there is a potential that we might go below two. That is going to be insane. If that happens, that is absolutely insane. And I think at that point, anybody and everybody who ever had a mortgage or any of that stuff, if they haven't already, and they're not doing that already, will be jumping on the trade. And that could be one of the ways that the government, that the Fed, that the leaders of the free world, so to speak, may look to preserve real estate from crashing badly. Because remember, we have those furloughs and forbearances and the delays and all of that stuff that is supposed to be coming first round in fall of this year, second round in spring of next year. There's all these pieces that are talking about that economically speaking we're not going to recuperate until about 2022, 2023, right? So this is a long haul thing. This is not like the summer is here and everything is gone like people expected in early first quarter of the year, as they say. So there is a potential where we might see, in order for them to prevent all of this stuff, that they're going to start dropping rates and potentially mandating or matching or doing some sort of something to keep the lenders whole. And that could be a way to keep the real estate market going, is to keep dropping the interest rates, so that your mortgage interest of what you pay is super super low. And of course that is going to drive the prices, because if I can buy a home at 5% versus 3% versus 1%, at 1% I can buy way more home, meaning I can afford a higher price, I can afford a bigger space, right? And so that prevents the prices from dropping down. But we'll see what it looks like. I just wanted to share briefly with you the fact that even the report is saying, yeah, we do expect that this is going to come closer to two than anybody ever thought possible. Mortgage rates are at a record low and could move even lower. And what they're saying is, could that limit be tested? They're saying absolutely. I am saying absolutely as well. And I think that that is potentially going to happen. Again, certain things kind of have to play out. So it's not like a science, a guarantee. As I always say to you, my crystal ball broke. I'm just using a broad picture thinking, viewing, experience, knowledge, education that I have to talk about what I think has a potential to happen. Hold on, water break. Okay, so that's kind of where we are. We have talked so much about real estate and all of that stuff and topics, that I actually now would like to change slightly our topic. Of course, it's always going to focus on money and wealth and how do we improve and protect ourselves and stuff. But I want to talk about precious metals at this moment. So first, we're going to jump into the gold story, because gold has been doing some amazing stuff. Absolutely amazing stuff. When the pandemic started, I was definitely monitoring what was going on. And I believe we will take a look into this stuff. Okay. I promise in this episode right now. But I believe that the gold price was below 1700. We are above 1900. So in 4 months, we have gone up well over $200 for an ounce of gold. That is a great and excellent return, especially such a period of time where it was hard to find some yield. But there you go, you get yield right here. So here we go. What are they saying? Well, they're saying pandemic has pushed the price of gold to a hair's whisker of its record high reached almost a decade ago. All-time high of around 1920 reached in 2011 in the wake of financial crisis. I don't know that it was in the wake of financial crisis. I think it was a tail end of financial crisis when that happened, because wake of financial crisis. Sorry, Forbes, I disagree with you. This is in Forbes if you want to read the whole thing. Uh, but I disagree with them because it's not in the wake of financial crisis. Wake of financial crisis was 2007, maybe 2008, but definitely not 2011. By 2011, we were long gone, moving on, shaking things, moving on up, as they say, and that was happening, everywhere, including real estate, right, which was the hardest hit component of the whole thing. So it wasn't necessarily in the wake of a crisis; it was towards the end of the crisis. What is happening right now is in the wake of crisis. One would argue. I mean, I know that it's not March, but still, a lot of these crises, they're not like cold, right? Like you have sniffles on Friday, by Monday you're perfectly fine. That's not how it works. There's long-lasting consequences. It's more like a open chest surgery. The surgery is over, but the recovery is lasting a very long time and it's very painful and it takes forever before you can like climb up the stairs and lift heavy objects and run and do all these different things, right? That's more like what this is like. And so, technically speaking, since we're just out of hospital but still in a bed at home, if we were to use the sort of the open chest surgery analogy, we could argue that we are still in the wake of the crisis. So I would say we're in the wake of a crisis right now, but not in 2011. Now, the rally and the likely further surge comes as investors are increasingly worried about the purchasing power of the US dollar. And not just that, but they're also worried about what's going to happen with the market, what's going to happen here. How do I translate my currency from here to there? And keep in mind that just like dollar, the gold is global. So it's not just the U.S. individuals, because they're talking about the U.S. dollar over here and trying to come up with the narrative. It's not just U.S. individuals. This is around the world, global price for gold. Now, of course, it's going to have a slightly different denomination piece when you say in euro versus yen versus renminbi versus dinar, whichever dinar it is in the world. There's so many of them, right? Um, but it is a global price and it's very much set, and so you're not going to get, if I want to buy an ounce of gold in United States, right, as of today, it's going to cost me $1,900, and if I was to go into Canada, it's still going to be 1,900 US dollars, and if I was to go to, I don't know, Portugal, it will still be $1,900, and Argentina, $1,900, right? So wherever you go around the world, it's going to have the same price denominated in the same currency, right? Akin to cryptos, which is why I'm kind of combining the two today, because I think it's important to talk about both, and I will explain sort of like why and how and kind of what the up and downside are of both. So uh, uh, the borrowing comes at a cost, and the U.S., of course, it does. And the U.S. will either need to raise taxes, which I think they will, and the government will need to print money, which I think they will. So it's not going to be either or. I think they're going to both. So even though Forbes says or, I am saying both. We will see both of these things happening. Now, the green pack will fetch against the basket of major currencies recently fell to 94.7%, down from a recent high of around 103 in not sorry percent 94.7, down from recent high of 103 in March. The price of bullion is inversely correlated with the value of the dollar, implying that when the dollar drops, gold goes up and vice versa. So that's kind of where we are. I don't know what it is. There's certain days where I'm like, I could drink like, gallons of water, and then there's certain days I don't need anything. So if you know how that works, let me know in the chat or the comments because I'm curious. And sure, I could probably ask my doc. She'd probably explain it. Anyways, so this is kind of what's going on, and one of the things that is very cool that the gold has been going up and it is going up, and I think it is important piece to consider. Now I do want to take a look at the price, and as you can see, we're just above 1900, so we haven't hit that all-time high, but we have definitely broken over some key resistance levels, as they like to talk about it in the world of investing and trading. Now right here we can look at the 30-year gold, right? and you can see that it's been kind of, steadily going up. And then look at this in July, it really started to pump, which makes me think that we might see a little bit of the side action before it continues to go down. Because if you take a look at the 60-day gold, you will see it goes up, kind of sideways downish, up, sideways downish, up, sideways downish, right? It has this very intricate sort of rhythm about it. And so I think it's important for us to pay attention to it. And I think that that's kind of what we're going to do. So let me see if I can. Well, I can, and it pops up in a new window as opposed to popping up. Let's open in a new tab. Let me see if that's going to happen, because it didn't do it. It's not doing it. I don't know why it's not doing it. It doesn't like me because it pops in a new window, but the new window is not showing to you. So I have no clue why that is. Uh, yeah, I don't know why that is. Okay, let's do something very interesting. We're going to cheat. I'm going to zoom in like this. How does that sound to you? Haha, figured it out. Okay, so here's what we were talking about, the 60-day gold, right? And you can see kind of how it goes up, sideways motion, up, sideways motion, up. Now, I want to take a look at 6-month gold. And so here we are in March. And as you can see, in March, when, in February and stuff, we were at about 1700. So this is 6th of March. Then we had the dump. And as you can see, that's right, I forgot, we were actually below 1500. So we went from below 1500, right, all the way up to above 1900. That's over $400 of what has transpired, and that is a huge, huge, huge return. And we can actually see the historic performance of gold, and you can see in 6 months it's 20% or almost 21% return, right? So here's that piece. Now they're taking the 6 months, and so that is running from like mid-January, right? So I think that this is going to change drastically, because if we were to shorten it to about 4-month period, I think you would see a much, much higher piece, because we're still looking at about $400 in 4 months, meaning that the return is probably closer to about 35%, right? And then on an annual basis, I mean, that's just off the chain, y'all. And you can see that it's been performing really, really well over the last few years. And what is really crucial and important to acknowledge, that even though it's been performing really well in the last 20 years, like 560%, that's nothing to sneeze on. That's basically 5 times of what has transpired, right, to sort of buy it. So it's $1,600. That means you bought it at, a couple $100 in 2000. So you are sitting very pretty right now, but I think it has a potential to go even higher. And the reason for that is this chart right here. Again, because I can't do the traditional regular zoom in, let's cheat. Let's cheat. No, that's not how I wanted to cheat. I want to cheat this way. So you can see this. You see this kind of how it has this. Hopefully you can see my mouse. It has this beautiful, formation, the U kind of piece. That is this like really cool. Like if you're a surfer and you see this wave forming and you can see it coming, it's just like beautiful, and you know that it's going to roll perfectly if you catch it. So if you caught this thing, here, 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 yeah, even here, if you caught it, even here, if you caught it, it does have a potential to really go up. And the reason that I also still believe that is because we're nowhere near of the sort of finalization of this thing. Because if you go back to even this article where they talk about how we hit, let me see, where's the article? If we go to this article, how they talk about how we hit the all-time high in the wake of financial crisis, what, like 3-4 years later, depending kind of how you counted, of when the crisis was official in your eyes, and it went to that high. Imagine what gold could look like a year from today, 2 years from today, 3 years from today. So I think it has a potential to go much, 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 much higher than where we are right now. Of course, this is not a financial advice. Do not buy something just because you heard a random dude on YouTube or his own channel one deal away. As cool as he is and as smart as he is and as right as he has been, I am not always right, y'all. You have to do your own research, okay? Do not rely on my words only. Do not rely on anybody else's words. Do your own research. Do what makes sense for you to financially before you make a decision to do anything. Fair? Cool. If you like this message right now, then I'm telling you, don't even listen to me 100%. Smash that like button if you're on YouTube. Let me know hello and say thank you if you appreciate that on the live chat. And as always, if you're watching this live, we're going to go into Q&A right after the show. So please, 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 even though what I'm saying, and I still believe it, and I am long on gold, and I am or have been investing in gold. Well, I am, I guess. It's not like I have and not anymore. But you gotta be very careful. You can't just listen to people and stuff, even if you trust them, right? Even if you know me, because there's a lot of folks that watch this channel that are my students, that are my clients, that are my colleagues, that are my family, friends. And I always say, this is what I am doing. You got to think for yourself, because what makes sense for me may not make sense for you. Some people can go in and afford to go into the derivatives and lose $100,000. Some people can't, because that's all of their life. And then some people definitely can't, because not only is all of their money, but they also borrowed it 10x. So you gotta make sure you pay attention to what makes sense for you. For me, gold has very strong potential, and I strongly believe in it. I have been believing in it in a very long time, especially when the pandemic started. Definitely think that it is one of those things, because it just performs really, really well. Not just in inflation, although it does, it performs incredibly well in inflation. It's a very good protection against very large inflations. I'm not talking like 1-2%, even though that 1-2% still has a power to eat your cash splendidly. Uh, but sorry, between the allergies, the heat, the cat shedding, and his cat hair is everywhere. I like keep going around sniffling, like being all kinds of emotional throughout the day. So I apologize for that. But so it's a great hedge against like inflation when we're hitting like much higher digits when it comes to inflation piece. But it's also like, while it doesn't perform incredibly well in deflation, it's not the reality that matters. It's the people's beliefs and behaviors. And so whenever we have a crisis of any sort, potential war, potential epidemic. Sorry about that. My apologies for getting kicked off. I have no clue what happened. All of a sudden, just a pop up came up, kicked me off. So I apologize for that. But we are back. We are back. We are live. So, again, my apologies for all of that stuff. Again, I have no clue what happened. I'm still learning. I'm learning about technology a lot, and I've learned a lot. Very proud to tell you that, but I'm still in my infancy, as they say, very much in my infancy when it comes to that stuff. So what I'm saying is, gold performs really well when there is a pandemic, when there is prospects of potential war, when there is a chance that something major could occur and happen, to all kinds of different things, whether it's a cold war, hot war, inflation could hit high, that kind of stuff. And I think we're hitting all of that stuff, right? There's a potential that, right now we're fighting deflation, but we're dealing with the pandemic. There's a lot of uncertainty about the pandemic and the virus, right? So that's a huge piece where it's driving the gold price higher. There are people that believe that we're going to hit really high inflation, potentially hyperinflation. That's what's driving the gold higher. We are now hitting the trade wars, currency wars, potentially getting into this Cold War that could turn into hot war with China and maybe some other countries as well. So that also is driving the price, and not just here in the United States. Remember, that's around the world, because when the two or three largest forces in the world collide, the rest of the world feels it, right? The rest of the world suffers in addition to the largest forces. So that's why we're seeing gold perform incredibly well. But it's not just gold. There's a thing called silver, and silver has been off the chain. They have been jumping insanely high. Let's jump in and take a look at the prices. Look at this thing. Look at this thing. Do you see what it's doing? Last time we talked, we were in the teens. Now we're in the 20s. That's right. In 30 days, look, it was sort of snoozer fest-ish kind of going on. And then mid-July, boom, that puppy went right on up. And now it's kind of, come a little bit down and it's sort of going sideways moment. And I think we're going to see that. So for that, to learn that stuff, we are definitely going to look at this longer trend of kind of what it does. But the important thing to remember, one of the things before we go into that stuff is that while gold has performed incredibly well, silver is performing incredibly well, but it has the potential to outperform gold, and that's not unusual. That is very, very normal for this particular metal, and it makes it very cool. So let's take a look at what's going on. And again, we're going to have to cheat a little bit because remember when I click on this stuff, I can't enlarge it, and so we can kind of see. Look what's happening here. Does this look familiar to you? Because it should. It should remind you a little bit of gold, except gold is already done its little up to come kind of close to it. Silver has not. Silver tends to be much more volatile, so that means that it moves much more up and down. Whereas gold kind of tends to be this sort of like a smoother cousin kind of going on, where it does go up, but it kind of goes, it's like a um, grandpa, right? It moves like a grandpa. I mean, you get grandpa excited, he can move, but he prefers to stroll down the streets, smoking on the pipe or, chewing on the grass or whatever you want, however you want to imagine your grandpa in your little head, right? And then silver is this like teenage boy that is like full of energy and runs up and down. And then if you give him sugar, like he's definitely going high, and then he kind of crashes a little bit. And so that's kind of what we have. Grandpa is very predictable. He has his moments where he's up and chipper and, ready to move a little bit more. But he has his also moments where it's like, it's nap time. Silver, on the other hand, is like up and down doing crazy things. So if we consider that stuff and we take a look at the 10 years, so let me zoom in. Let's kind of go in and take a look. All right, can you see this? Well, you can't see much of anything because we're not on much of anything. But you see this? Remember how gold had this thing where it kind of hit it? Again, it was in 11, and then it kind of went down, and then it sort of went up. So it completed that sort of smile shape. Some people call it. Some people call it cup formation. Some people call it U. Whatever you want to call it, it's that sort of this. I mean, I don't know how else to call it. I think I called it everything that makes sense to call it. Maybe boat formation. I don't know. Let me know in the chat and the comments what else you would call this formation. But you can see that gold has already done that. Silver has not. So it has a potential to do that, which means it's going to overshoot on the return, not on price, right? I don't see that ounce of silver is ever going to be worth more than an ounce of gold. I mean, crazier things have happened. I guess anything is possible in the world, but it's highly improbable that that will happen. However, when it comes to the return on investment, it is highly probable and potential that the silver will outperform gold when it comes to all of that stuff. Now, let's take a look at what the article was talking about here. And did I clearly? Okay, I was going to say, I'm like, I know I read it and highlighted it. Where did it go? All right, it's here. It's here. We're safe, Nev. Not to worry. Okay. Silver prices just made their biggest weekly advance since the 2008. Climbed 20% over the past week to $23 an ounce, an increase of more than 94% from its bottom below $12 in March, and a run-up of 28% so far this year. Insane, right? I told you, it's like a teenage kid filled on sugar. Like it just goes a mile a minute, and you can't seem to shut him up. Silver Boy forming a big base while trading sideways over the past 5 years. So that's that sort of you smile cup boats, saucer, whatever else you want to call it, formation. For now, silver is still trading 50% below its 2008 financial crisis peak of $46.08. And precious metal had an all-time high of $48.70 back in the 80s when the Hunt brothers attempted to corner the silver market and didn't quite succeed. So we are still not even close to the top of the market. And when we look at the S&P 500, we look at Dow, we look at Nasdaq, especially Nasdaq. So S&P 500 and Dow haven't revisited their highs, but they're coming pretty darn close to it. Nasdaq has definitely beaten it and has continued on up. So you then look at the silver and gold, and they haven't done that, but they're positioned, well positioned to be able to do that. Now, again, not a financial advice. There's no way that anybody can guarantee what is going to happen, but it wouldn't be surprising or shocking for silver to actually go up to triple digits. It would not be completely surprising to go over $100 an ounce. Now, if that is the case, and you bought this at $12, where's the thing? Where's the thing? Okay, right here, below $12. So I think it was like $11 something. I remember, and it might have been even lower than that. Let's take a look at the chart, y'all. Where's the thing? Where's the thing? Where's the thing? Let's take a look at 6 months. Yeah, okay. So it was right around $12. So right, like just slightly below. And and it was flirting at like 17, 18, 15, 16, 17, 18 for forever. Then it dropped down to 12, and it kind of didn't do much of anything. But you can see it has gone up, then slightly down, up, slightly down, up, slightly down, right? So if we follow, right, let's get into the trend with the whole thing. Up, slightly down, sideways, up, slightly down, sideways, up. So now it went up. What do you think is going to happen? Slightly down and sideways. So you will have a potential. It could potentially go all the way down to 20, maybe. I don't know. Anything is possible. Maybe 21. But, we'll see. What is the current price right now? Current price right now. Hold on. Let's zoom out because this is a bit silly. 2271, 2281 bid ask, right? So there you go. That's kind of where we are. So it could revisit $20, $21 before it potentially continues to go up, because you can see that it's already done a little bit of that. And if you follow the pattern of what's been going on, you can see that kind of how it behaves. And you can see that, remember how I told you it was sort of like super boring? It was like nothing. I mean, it was flat line right there, right? For like a good amount of the year. In 5 year, like it did, sort of up, kind of down, side, 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 down, slightly up, down, slightly up, side, 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 down. And then look at this, right? When you zoom out. So look at what it's doing. And it's nothing comparison to what it has a potential to do. All right. So now, gold has rallied just 28% off of its March low to 1900 and has risen 24% year to date. Currently valued at more than 82 times the price of silver, average is 64.48 since 1980 and can fall as low as 14.81, climbing as high as 125 to 0.89, and that is gold silver ratio. We're going to take a look at that in just a moment, but I do want to visit what's going on with the why is it showing me historical gold price performance? We've already looked at that. It says gold, but I think it means silver because everything else is silver on the page. See that? So, Kitco, I'm going to need you to fix this stuff, my friend. Clearly somebody in the programming, and I know exactly how it happened. So before I started learning all about programming, I got to tell you that. Before I started learning all about programming, I wouldn't have known exactly how this happened. Now I know exactly how this happened and why and what they were kind of using to do this stuff, which is pretty freaking cool. And a huge shout out to my mentors for teaching me and helping me learn how to become better at programming and tech stuff and all of this stuff, which, as you may know, is really, really important because we're developing tech products and all of that stuff. So I'm really, really excited about that stuff. So for me to be able to know things now, I can't do everything on my own, so I do have a team, but it's important for me to know stuff. So, anyways, I know it says gold, but it is silver, and as you can see, it has performed quite nicely over the past 30 days, like 30%. So that's a very, very nice return, and we can take a look at it ourselves. So from $12 to $23, I mean that's even 22. That's a very, very pretty and amazing return. Now here is what I wanted to share with you and what you are seeing right now. Let me see if I can zoom out a little bit maybe so you can see it easier. Is this better? It's better. Okay. So right here, what you're looking is silver gold ratio, right? And it will tell you, right? This is a 100-year historical chart of what you're seeing. And as you can see, it kind of dips super low and it goes up and it dips and it goes up. So it always fluctuates right here. Now, let's go in and take what's been happening in the last 5 years, because my options are 5, 10, 20, 30, and then all, which is like 100 years. So as you can see, the ratio of silver and gold has been flirting between, let's say 65 to like 90. Then we've hit this like 115 in April, which was insane. And on April 10th, I want to say, I have done a sort of a live Ask Me Anything piece. We haven't done one of those. Maybe we'll do that again. Ask Me Anything piece that folks were kind of jumping in. We did it slightly different, and so there is a piece where we talk about this stuff, how it has to come down, and boy, has it come down. And as you can see, we're sitting at 82.38. However, it does have a potential to drop down to the 60s and lower. So if we look at right over here, look at this. It's down to 30 in 2011. So remember, we've been using 2011 to talk about the highs of silver, the highs of gold, what did they call it? The wake of the crisis, which it wasn't really. Well, maybe it's the wake of like the post-mortem wake. Maybe that's what they meant. That's what they meant. Yeah. English as a second language, sometimes I think in my head I was thinking woke, and they're saying wake as in forgive me. Forgive me and my ESL self. So anyways, in 2011, when all of that stuff was, hitting super, super high, and we're hitting some of these highs or coming close to it, it also dropped to 31, the gold to silver ratio. So if we were to basically take a look at that stuff, and you can do the math on your own. So I'm going to teach you sort of the strategy technique for yourself right now, and then you can do this on your own to figure out of what's going on. You basically take in the price of gold and the price of silver, and you see where the ratio is. Now adjust the ratio, and if the gold, as they have been saying, by 21 has a potential to hit well over 2,000, they were saying like by 22 it might be $3,000 to $5,000. How high can silver then go, and then adjust for the ratio, right? So you want to absolutely do that, and that's kind of how you get some of these prices of what could potentially happen and potential returns. And now you understand why there's so many people that are very, very bullish on silver and what it can do. All right. Now, I know I have promised that we're going to talk about crypto. And I didn't realize that gold and silver was going to take so much of my time to talk about the fundamentals, to explain stuff, to get you going with this. And the episode is already running a little bit on the lower end. So my apologies for this. We can quickly take a look at the cryptos if you want. Yes. All right, we're going to take a quick look at the top 100, the performers, the up, down, that stuff. And then I promise this entire weekend, we're going to focus on crypto and crypto alone. Fair, cool, awesome. All right, let's do this. So Just a very quick sort of top 100. As you can see, I mean, last time we talked about Bitcoin, we were down in like 9,000. We're about 9,500. So, hey, if you invested and bought some at 9,000, you are sitting pretty right now. ETH is doing rather lovely. Um, Again, for some reason, you never know how things are going to display. So anyways, you can see that we are mostly green. There's some red, but mostly green. When we look at the 24-hour change, the top is going to be swipe, which makes sense, and I will explain to you exactly why tomorrow. Ampliford, Blockstar, Tomochain, Aave, Cardano, Binance Coin. I'll explain why as well tomorrow. Litecoin, Verge, Hedge Trade, Nervous, and so on. And the biggest losers or the dumpers or negative, which is not all that, whatever, is Band Protocol, Kava, DV, Quan, Digibyte, Midas Touch Gold, Aurora, Loopring, Chainlink, Vela, Zilica, Tezos, DAI, Swissborg, and Kyber Network. And so some of these, they have bumped quite a bit, and it makes sense why some of these drops have happened. But I will tell you what, 7% on something that has gained 45% is nothing. So, and we'll talk a whole lot more about all these different projects and reasons why and all of that stuff. So make sure you come back tomorrow. Fair deal, cool. And until then, stay forever money blessed. And to remember, you are only one deal away.